Extet from Forex Trading Unlocked, and we are here with a daily Forex market breakdown for you for December the 23rd. Can you believe it that we are coming into the last week and a half of trading for the year 2019? We're going to be closing it out soon and starting a whole new decade. So before we get into our webinar here, we just want to remind you that this video is for illustrative purposes only. And with that being said, I think now we can jump over to our live action screen and see what's going on. So we have the forex-trading-unlock.com workstation page already pulled up on the www.forex-trading-unlock.com website. So what are we going to cover today? Today we are going to cover the major foreign currency cross rates, and we also have a buy signal going on in one of them. That would be the US dollar Canadian dollar cross rate. So we will get to that, and by the time we get to it, you're going to see that because we are heading into holiday markets, that might be the one real opportunity to capitalize on. So with that being said, let's pull up our page here a little bit lower. Check out the economic calendar. So for tomorrow we have M3 for Switzerland. We have the market comp PMI for Germany. We have durable goods in the United States. Building permits also are coming out. We have GDP for Canada, which actually, when we get to our buy signal, this will be important. So that might be fueled by what's going on right now. And then we have new home sales also in the United States. So there's not too many numbers coming out actually this week, but there are a few that are starting the week off. There are definitely some interest rate and currency numbers, especially when it comes to the GDP. So the first market that we have right here is the euro pulled up. Let's get the news part off of the screen here and also the volume. Now, before we actually settle into this, let's take a look at the dollar index. So the dollar index has been acting very, very interesting as of late. And with a week and a half left, it's going to be even more interesting to see how it ends the month. So the index had a buy signal here. This is a high probable Japanese candlestick pattern right here. It's a buy signal, and we had it targeting the 97.5 to 98 even range. So it's already hit into our target zone. Does that mean that the rally is going to stop? Absolutely not. But it is kind of buffering up against a key little pivot level. So if you'll notice right here off of this low, maybe make the color a little bit more obvious here for you. You can see how easy it is to manipulate these on the website. Okay, there we go. Much better. All right, so there we go. There is our pivot. This green line here, this horizontal line right here, you can see that the Dixie settled just below it. Now, this is kind of a pivot point. Usually the dollar index starts to run out of gas and falls back below the line and targets more support, or it becomes a catapult to rocket it higher. Now, the consensus right now that we have, since we have a sell signal that had been triggered back in the end of October, and I'll pull up the monthly real quick. So here we go. So as you can see that we have started to retrace most of what happened in November from the little corrective rally. So the question is, are we going to head back on these monthly lows, or are we going to stay kind of neutral to choppy, maybe a bull? Right now we have a sell signal. This is this big red line right here. This is a bearish engulfing signal right here that was triggered in October. And right now that sell signal remains in place. All right, so now that we have kind of a clue as to the dollar index, we are a little bit bearish for our bias. Then let's also start our currency crosses here. Now the funny thing is here on the monthly, on the euro for October, we also had a bullish engulfing signal right here, which is a buy signal for the long term, and right now it looks like it seems to be holding. So we're going to go now to the daily and see what we can make of that. So the dollar index had a nice rally last week. The question is, will it continue or will it collapse? So right now we had a nice sell-off last week in the euro US dollar, and the question is it a corrective move or is it the beginning of a new bear trend? Well, the overall trend is neutral, and definitely the trend over the last month and a half has been definitely neutral to higher, especially making this higher move high a little over a week ago. So right now we have the Sunday trade that's evolving. Obviously you can see that the market is slightly lower And let's move it over here, make it a little bit easier to see. So now the question is, what are our levels to key off of? Well, right now I would say that your high from a week and a half ago is where your upside level would be. So for your bulls, I would say that if you are targeting something, this is the level you need to have a breakout from. Now the question is, will you get a sustained breakout above that level? Well, the way this market's been trading, it's been pretty much sideways for a while. And just to let you know that the dollar index is in the tightest range it's been in since 1976. So that also probably would be one of the reasons why the euro US dollar has been in a very, very tight range for basically the past year and a half, but definitely over the course of the past year. All right, so that being said, where else are we looking? So our next pivot for a major bearish consensus would be right here on this prior low right here. So this low right here and this high are your major pivot points for direction. Are we expecting very much over the next week and a half? Well, we do have those numbers that are coming out for Germany and for Switzerland, so that may affect the euro a bit. However, we are really not really looking for very much. Now, I want you to be mindful of something here. These pivots here, this is $1.0982, and this is $1.07. So you only have a little more than a $2 range here that we're looking to pretty much be chopping around in over the next week and a half. Right now we don't have any signals here. We are overall bullish. So right now I would say look for reasons to buy. Right now the market's a little bit lower, so I would wait more for a signal for that than anything else. Now here's another level you can key off of too. That would be this low right here. A failure from here most likely will have it pressuring this $1.0982. So I would say that if you want an aggressive bearish signal, then that would be a slide below this pivot, and that would give you not much to look forward to, but it would probably have this market leaning back on these lows here. Now, if it does take out this low, is that very bearish? Not necessarily. It could just spike a little bit below it and then start just setting up a range trade higher again. So be very mindful of that. Excuse me, that this market has really not been the best for swing traders, not giving you much opportunity for any move, whether it's to the upside or to the downside. So with that, we're going to go on to the British pound US dollar now and see what we have there. Remember, we do have the US dollar Canadian dollar buy signal that we will get into and evaluate once we get to that part of the world. And if you like what's going on so far in the video, we'd like your comment as far as our dollar index prognosis, that we're bearish overall since October, and right now we're looking for these rallies to collapse and be nothing more than corrective moves, which then would help to lift the euro and other major currency crosses against the dollar over the next couple months. So now the euro, we said, was in a big tight range, and our expectations are not very much. The British pound, however, is a totally different story. Now the British pound, as you can see, has been correcting after it had this nice little breakout here. So now, is this all of a sudden being bearish? Is the bull run over? Well, you never know. It could be, but I don't think so. I think if you see how this is kind of at the settling down here on the upper band of, upper level of where this range had been for that month and a half while it was consolidating. So now I think that this is becoming support. Obviously the market's a little bit lower right now, but as you can see, the volatility was earlier in this break, and now it started to tighten up. That being said, I think that you're probably going to see some basing going on into the holidays. Remember, we have a holiday trade going on, so it does impact the trading all around the world. So I think that most likely you're going to see probably a neutral trade in the pound US dollar, and I would key off the dollar index. The dollar index is starting to look pretty, if it goes negative and it's in the red, I think you might see a little bit of a lift in the pound US dollar. And especially if you get a big move, a big sell-off in the dollar index, then I think you could probably get the British pound back over this $1.32 level. So let's see. We're going to put our little target here, right here at the $1.32 level. And we'll color this one a little bit different, just so that it sticks out a little bit. So this would be our target, a $1.32.11. This would be if the dollar index starts to sell off. Now, if the dollar index continues to rally, then I think that most likely that this would be your pivot to watch out for. Okay, so now we're going to go back to our normal yellow. So this would be your downside pivot this line right here. Let me just get that solid. All right, and then this would be for your bears. So anything below $1.2766, then I would say that you have a really good shot at being in a bear trend that is not just a corrective move. However, I think that now that we have the elections over in the UK, things are settling down. Does that mean Brexit's going to be easy and just totally happen on schedule now, whatever that schedule is? I couldn't even begin to put a finger on that one. Not even going to try. However, I do believe that the pound does have a good chance at maintaining this rally that it began back in the summer, where it based and now has been basically gradually moving higher since then in the wake of lots of bad news, considering that Brexit never happened on October 31st, and now there's the question of will Boris Johnson be able to gain unity between what the different factions in Parliament to help things move his way and move much more in an expedited fashion? So let's go check out the US dollar Swiss to see if it gives us any indication about dollar weakness or strength. So right now we have a little bit of dollar strength showing in the Euro US dollar and the British pound. US dollar. If you are trading any of these, please leave comments on our video about any of these markets, and we will definitely answer them to let you know what we think also about your opinions and whatever on it. We definitely want to know if you're bullish or bearish to pound US dollar and the Euro US dollar currency crosses, as well as even the dollar index. What is your opinion on that? So subscribe to our YouTube channel and then leave some comments on it, because we definitely want your feedback and we'd like to interact with you. So that being said, what do we have here? Well, I'll tell you what we have here. We have a US dollar Swiss that is only slightly lower right now. So that's kind of funny how the US dollar is actually weak against the Swiss, but not against the other European crosses. So what does that mean? Well, it has been obviously on a bearish tear for the past few weeks, especially for the whole month of December so far. So I think right now this is just a corrective rally that we're seeing right now, and probably the way this looks. Now, this is a very steep sloping bearish trend here. I wouldn't try and catch a falling knife here, but I do think that this has a chance of probably going sideways to maybe a little bit higher over the next session or so. But that's about it. And we had a failure at parity up here at the beginning of the month, or excuse me, the end of last month. And that was a big deal. So I think with the dollar index, especially if the Dixie's under pressure, then the US dollar Swiss will also remain in the same category. Now remember, the US dollar was gaining strength against most of the currency crosses last week, and here it wasn't against the Swiss. So there's a little bit of a divergence as far as what direction the dollar is going with certain major currency crosses. The same can also be said of the US dollar yen. And if we have any yen traders out there, we'd really like your feedback as to what you think about the potential for the trade deal between China and the U.S. actually becoming a reality in the new year very quickly, especially since we have an election year coming out. It would be interesting to see how many of our viewers and watchers think that that will be a big card that could be something that will obviously impact, I would think, people's choices in the election coming up. So that being said, let's go look at the US dollar yen here. And as we can see, the US dollar yen is hovering below resistance here, while the US dollar has been falling or rallying over the past week and a half. Ironically, this just butted up against resistance and went sideways. Very interesting how the US dollar yen has been trading over the past few months, much differently than the other major currency crosses. Very difficult to get a read on it. It's kind of like when the dollar index sells off, the US dollar yen only sells off a little bit, and when the dollar index rallies even just a little bit, the yen can just pop. So it seems like the yen is just weak against the dollar no matter what the dollar index is doing. So be careful when it comes to this particular currency cross when looking at the dollar index. Remember how I said like the euro and the pound seem to be kind of in an opposite direction. Whereas with the US dollar yen, it's very hard trade to gauge on that one. I would say it's more independently moving against the dollar right now. So here we have the Australian dollar, US dollar. Now that we are pulling up, this market is slightly higher today, following through from the upside rally that it started back a few sessions ago, back at the end of last week. Overall, this market has been in a bull rally for since the end of November, and has only had some corrective slides. We have this high, this higher move low, this higher move high, this higher move low. So right now, that being said, I think we're just going to follow the trend of looking for a challenge of this high that we had made a little over a week ago. So I would say basically the 69.5 area is probably the high of where you're going to see this market move potentially over the course of the next week. Remember the holidays. If there's any of you out there that are Australian dollar currency cross traders and you trade any of the other Aussie crosses, leave a comment for our video, if you will. We'd like to hear what your take is, because we know that the trade deal is definitely going to be a big deal for Australia, because China is one of their biggest trading partners, especially that's where they deliver most of their commodities. So it'll be interesting to see what some of you Aussie traders think about the Australian dollar versus some other currency crosses besides the dollar, especially the Australian dollar euro cross, and also when it against the pound, especially because there's a lot of things going on in Europe. I think there might be some interesting swing trade possibilities in those markets. Now here is another lesser of the major currency crosses that we're going to look at, the New Zealand dollar, US dollar, and see how the Kiwi is functioning here. All right, we have a sideways market going on. Pretty interesting how the dollar index had a nice rally last week, and this market also went sideways, kind of like the yen, and hanging just below highs. Now this market has obviously been in a bull market since October, and like the euro and other currencies, this market definitely at the beginning, or excuse me, at the end of October had stamped a nice little rally. And we'll show you this right now, what this means here. So on the monthly basis for the New Zealand dollar, US dollar, you can see that in October, boom, you had this bullish engulfing line also. So you had a lot of currencies that had bullish engulfing lines that were triggered in October. Also, a bearish engulfing line was triggered in the dollar index. They all seem to be pinnacly perfect on that, or within that time frame of around somewhere around the end of October. Or beginning of October, excuse me. And here we have the follow through of the New Zealand dollar on this rally here. So now overall this market's been in a bear market. Is this just a corrective move or the beginning of a long-term rally? Well, that's a good question. I think that if over the long term, the New Zealand dollar, US dollar, if the dollar index truly is in the beginning of a bearish sell-off that will last a few quarters, meaning anywhere from 4 to 6 months at least, maybe even upwards of 9 months. In that case, I think you could see the New Zealand dollar actually start to really become a neutral to higher trade and continue for a period of, like I said, of 3 to 4, 5, 6, maybe even 9 months, in which case we would get somewhere probably up in the 70-cent range, maybe up to the 75-cent range. Pretty much where it would be in this, where over these years here, this was the band that you were trading in. So even if it continues to rally, obviously that would be a bull. Then that would probably be where it runs out of gas, I would think, but it all is indicative of the dollar index. Who knows, maybe if there's a major long-term dollar index multi-year trade, then this would continue up higher. So, but right now our short-term projections are towards the 70-cent level. Remember, right now this has been in a bear trend where here was this high, and we're going to use this little thing right here. So this would be the major long-term level to get above, and that's pretty high up there. So from this high, we have this low, this lower move high, lower move low, lower move high, lower move low that was stamped in October. And this, I think, is your line in the sand. Like anything above there keeps this in a sideways to higher trade. Only a failure from here would be indicative of potential sell-off. Now, we were talking about that one signal for you guys, and here we're going to it right now, the US dollar Canada. So for any of you guys that are US dollar Canada traders, definitely let us know your feedback on this signal and tell us what you think. And obviously we'll see what happens. Now you can see on the monthly basis that Canada's been going nowhere. But now we're going to go to the daily basis because that's where we found our signal. Now, like I said, remember the dollar index, we are bearish, but right now it is in a bullish mode. As you can see, the US dollar Canada has been going higher. Now, what do we have here? We have a buy signal. That's what we have here. So I want you to take a look at this right here. So the low that was stamped a few sessions back, that was the first day of this buy signal. So right there, that is the first start of what we began for this potential buy. Now, the following day, there was a positive close. You can see this little body that was inside the bottom range of the day that the low had been set. That is called a harami right there in Japanese candlestick trading. And it is a weak buy signal or sell signal, depending on whether it was an up or down day the prior day before. And also you had to be trending into it. So now this market had been trending lower for over a month. And boom, there it goes. It set this low, and then, or excuse me, almost a month rather. And then, like I said, the first positive day is this harami. Then we have what was on Friday. This was the one that really gives us that, hey, what do we got here? I think we have a buy signal. This right here, the second day where we settled positive, this confirmed a 3 inside up. That's what this is, a 3 inside up. So the 3 inside up buy pattern is a high probable Japanese candlestick pattern. And once it emerges, and this also is the same thing as the harami, you must be trending down into it. It's not something that you can be in a sideways trade and you just see a lower day, a big sell-off day like this with 2 positive closes the following 2 sessions. That does not give you the signal. This signal only is triggered and only a true pattern if you were breaking down into it. So that's how you get your 3 inside up buy pattern. So that being said, where are we going with that? Well, I'll tell you where we're going with that. It is a very, very strong pattern that typically when this happens, it means you're going to not just have a neutral trade, you're most likely going to have a higher trade, meaning a corrective move is definitely in the forecast. Now, does that mean this market's going to turn around and all of a sudden become a major bull for the US dollar Canada? Absolutely not. However, what it does do is give us a good idea of where it may retrace to. So now remember, this market right now has been in a bearish sell-off where 3 sessions ago it bottomed, okay? So follow me if you will. So here was the high that we're using. So we're going to use 2 levels for our targets, okay? The first one is going to be the 0.618 and the other is going to be the 50%. Okay, so that being said, we found our Fibonacci levels and also our upside targets. So our first upside target would be this $1.3215, and the second would be $1.3242. These are our corrective targets that we're looking for this buy signal. Now, does that mean that this market is going to continue higher and make it up there? You never know. We're not saying it will. We're not saying it won't. What we are saying is that it does have a potential to reach that area now that it has had this pattern emerge. All right, now let's get this just a little bit thicker. Okay, so you can see this is our target range. Okay, so between $1.3215 and $1.3242, that is our target. And then we have for our risk, it would be the low that was set 3 sessions back. So $1.3105. So the rally is already in place. So if you're a cautious bear or bull, then you would be waiting for a pullback and then a chance to buy it lower. Right now, you're right still in the good buy range. Now think about where it's at right now. If the market's at 131.49 right now and we have 131 even, so that is 49 pips. What are we looking to go to? We're looking to go to 132.15. Okay, so what is that? That's going to be about 65 pips right there. So the first target level right now you would be risking down to here. So that's 50 pips to make 65 pips. And then the other one would be up to $1.3242, which gives you an extra leeway of another 30 or 25 pips there, or 27 actually. So that being said, we have a nice little target range right in here. Let's make this a little clearer. This thing is not quite the, there we go. Okay. All right, so this target range right here, somewhere in these one of these two pivot points, $32.15 to $32.42, is where our bullish expectations are for a correction. Now remember, here was this high, then we had a series of lower move high, lower move low. So right now, as long as it stays in this range here, that would still qualify as a lower move high. This level right here, we'll change the color. This would be our breakout point for any true bullish breakout, at least as far as we are concerned. And we'll put this right here. There we go. All right, so this pivot point right here would be our area where we are looking for a breakout, only as a sustained bullish breakout, that is. But that's not what we're looking for right now. We're looking just to get into this target area, and that will be it. So don't get too crazy on the trade. If you're a major bull, it's a totally different story. If you have higher targets and you're thinking the US dollar Canada is going to be bullish for a while, well, I'll tell you what, then that means that the signal that was set up over the last few days would be the signal to follow for that trade. And if you're a bear and you're an aggressive bear, at least you know this is your level. Below $1.31 even, the signal is negated and the trend is back in action. But if you're a bear and you've already made some profits, or you're wondering where to get in, then I would use caution and wait for it to trade up into this band here, this target area here, and then look to sell it. Because then you know you have a low-risk trade, because if this market is overall bearish, and especially if the US dollar index continues lower, then we have a good chance that this market, if it does head up into this area, most likely it will run out of gas instead of breaking out above this $1.3270. But anything above $1.3270 up here would definitely have us on a bullish tear. So with that being said, if you're interested in learning more about these high probable Japanese candlestick patterns, you can actually download the book for free right now on Amazon. The Kindle version is available for free from December 21st through December 25th. It's our Christmas gift to all of our subscribers and followers, which, by the way, please subscribe to our our YouTube channel and sign up for the alerts, because that way every time we go live you'll get an indication in your email of when we do, so you know when our analysis comes out, so you know when buy signals like this are you're getting them and getting them when they come out, so you can actually capitalize on them. So this book is good for Forex traders, futures traders, stock traders, options traders, you name it. Everyone can use it for buy and sell signals. Japanese candlestick patterns definitely work for all different types of traders and different types of levels of traders. The question is, do you know how to apply them properly? Most people don't, so it's very frustrating. So you can either buy the paperback version or you can buy the Kindle version, but the Kindle is available for free for the next few days still on Amazon.com. So high probable Japanese candlestick patterns, and you can find it also on our website, www.forex-trading-unlocked.com. Please like, follow, and share us everywhere you can on social media, and especially on YouTube. Follow our channel or subscribe to our channel so you'll be informed and get the the videos live when they happen. You capitalize off of them, hopefully. So that being said, thank you very much. I'm Teddy Keckstedt from Forex Trading Unlocked. You have a good